see that everything is now connected. I do hope that everything is working. So, my friends, first and foremost, let's go ahead and check the sound and the picture to make sure that everything is working. Let's make sure that you can hear me and that you can see me well. I'll go ahead and check in chat to see that everything is fine and everything is working well. What I like to do is I like to ask everyone if you are new, if you're here for the first time. And I also like to check if you guys can let me know in chat what country you are joining us from today. So there's a lot of people, from joining from India, from Bangladesh. I've seen people from Mexico, from Italy. It's really, really, really interesting to see where everybody is joining us from today. So once again, my friends, please let me know in chat if you can hear me and if you can see me well. And we are going to start. Today's topic is going to be basically this is a part of a series of live streams and videos about Forex, and we discuss different things that you encounter when you trade Forex. For example, today we are going to speak about technical analysis. So once again, my friend, I'm going to go ahead and switch to my platform, and I'm going to go ahead and just waiting for a confirmation from you, my friends, to see if everything is okay with the sound and the picture. Please let me know in chat. I just want to make sure that everything is okay with the video so we're not having any lags, and we are going to go ahead and start. So once again, my friends, just waiting for a confirmation from you. Emmanuel, hello from Nigeria. Manoj, hello from India. Wonderful. Thank you so much. John is from Nigeria. Patu is from Indonesia. We have Shahnur from Bangladesh. Everybody welcome. Farik from the Philippines. Also everybody welcome. So yes, fantastic. Let's just make sure that everything is fine on the platform. And then we'll go ahead and start with our stream. So once again, today we're going to speak about technical analysis. Now, what I would like to mention while I'm just waiting for everything to pull up and everything to work correctly, I'm going to go ahead and turn off the camera so that you can see me better, so that we're not having any lags on the platform. So now, my friends, once again, everybody welcome, and today's stream is going to be on technical analysis. Unfortunately, you won't see me on the platform, you won't see my camera, but that's not a problem. We're going to have a great stream, and my friends, my colleagues are in chat, so you can go ahead and ask your questions at any time. And I think the first thing that we will start with today is I will go ahead and tell you the promo code for today. The promo code for this week actually is SAFE, and then the number 20. You can see it displayed on the chart right now. Once again, it is SAFE and then the number 20. You can use this promo code when you are making your deposit, and this will add plus 30% to your deposit. This promo code works until next Monday. That's going to be April the 27th. So, my friends, please enjoy. Once again, it's SAFE and then the number 20 plus 30% to your deposit works until next Monday. And also, I would like to let you know, my friends, anybody that is joining us for the first time, please make sure that you are subscribed to our YouTube channel. So go ahead and click on the red subscribe button. Give this video a thumbs up if you like it. And of course, ring the bell so that you don't miss out on any important and new information. And also, you'll get notifications whenever we're having our live events and streams. So don't forget to subscribe. And so the first thing that I would like to bring your attention to is that we are speaking, our main focus is going to be today on Forex. Now, I've had a detailed stream last Thursday. So if you missed it, you can go ahead and check it in the videos on our YouTube channel. And just a very basic and brief overview about the Forex trading instrument. So now we are looking at the platform. We are looking at the price movement of different assets. You can choose the different assets that you would like to trade in the upper left corner of the platform. So you can click right here. Right now we're on Forex. We also have fixed time trading. I do have some separate streams that are dedicated to fixed time trading, so definitely check them out. I do my streams on fixed time trading, that's FTT, on Tuesdays, and we talk about Forex on Thursdays for the time being. So once again, right here you can find all kind of different, you can find different stocks, cryptocurrencies, metals, and indices that you can trade. On the other side of our platform is where we have all the parameters for opening and for opening the trade and how we control the each trade. Here is where we would enter our trade amount. We can set our take profit and stop loss. So these are basically orders for in the future for the asset to close, for the trade to close at a certain time, or at a certain when the price reaches a certain level. Now, what I would like to mention is that there are some differences between fixed time trading and Forex trading. Once again, I have some separate streams that are already available on the Olymp Trade YouTube channel about the differences, how a fixed time trading is different from Forex. So on Forex, our profit derives from by how far the price moves in the direction of the trend. So basically, we would sell right here and we would wait for the price to move all the way down here and collect our profit. So our profit on Forex derives from by how far the price moves in the direction of the trend. Another thing that I would like to mention is, of course, we have the multiplier right here. Now, once again, the multiplier is a financial instrument that allows for you to increase the amount of your trade by a factor of 50, 100, 200, or 500. And once again, during our last stream from last Thursday, I showed you how the trade works with the two different multipliers. So don't forget to check it out. Now, another thing that I would like to mention, just a quick overview. Whenever you are entering your trade amount, this is the maximum amount that you can potentially lose in case the trade goes in the opposite direction, regardless of how much you have deposited on your account. And on Forex, there is a commission charged for opening the trade. You can always see it right here before you open the trade. Now, as far as our topic for today, so technical analysis, what we have to understand is that whenever we are working, whenever we are analyzing the financial market, what we do is basically there are two different types of analysis. There is fundamental analysis and there is technical analysis. Now, fundamental analysis is the study and observation of macroeconomic indicators. Basically, it's like statistics that gauge the state of the economy. Also, it can be political issues and other factors that may affect the supply and demand of an asset. That's news releases, different indicators on the economic calendar, also speeches by different entities about political or maybe from banks and stuff like that. And basically these indicators and fundamental analysis, they determine if the price will rise or fall. Now we are going to have a separate stream on fundamental analysis, and that is going to be next week, next Thursday, so don't forget to join us. Now I do see my friends in chat. Hello, James from Kenya. Let's see here. Gurav Kumar saying promo code will work on $10 deposit. Yes, so it's plus 30% to any deposit amount. Let's see here. Adita is saying hello. Please stay safe and healthy. I hope that you and all your friends and your family also stay safe. Now, let's go back to our topic. So, fundamental analysis is going to be next week, next Thursday. Today, we're speaking about technical analysis. So, what exactly is technical analysis? Technical analysis is the study of the price movement and history behavior on the chart. So you can basically look at past and current data on the chart and find certain patterns that could help you find some great trading opportunities. Now, also please remember that with technical analysis, the old saying that history tends to repeat itself works very well. Now, today we are going to talk about levels of support and resistance, how to set them and use them on your chart. We are going to also speak about the moving averages and how to use them. And I'm also going to show you Fibonacci levels. which also show us potential areas of support and resistance. Now, whenever we are looking at the chart, there are three things that can be happening on the financial market. The price could be moving up. This means that traders are more interested and investors are buying the asset. This means that the market is in an uptrend or a bullish trend. Now, the second thing that can be happening on the market is that the price can be going down. This means that traders and investors are more interested in selling the asset. So this is a downtrend, which is also called a bearish trend. So bulls are the buyers in the market, bears are the sellers on the market. Now, the third thing that can be happening on the financial market is that the price could be moving sideways. This means that the market is undecided. For example, like we can see right here. Zoom this out just a little bit. So the market, it's kind of moving in a sideways. This means that neither the bulls or the bears are in control of the market. And when the price is moving sideways means that there is no trend on the market. And this is also called that the market is in a flat. Yes, Santosh Dekar, I do see we are going to be working with Euro US dollar. Basically, I'm just going to show you how technical analysis works. But basically, yes, I'll be showing you everything on the pair Euro US dollar. Now, what exactly is support and resistance? Support and resistance, it's basically an area of a price level where the price has either changed direction or has stalled repeatedly and couldn't break above or below the level. Support and resistance can help determine market turning points and can also be used as potential targets of where we can expect the price to move. Now, a bullish move, an uptrend that turns bearish, has met resistance. And therefore, resistance is above the price movement. Now, a bearish movement, so a downtrend that turned bullish, has met support. And therefore, support is going to be below the price movement. This is just some things that we have to remember. Now, there are a few different ways to draw support and resistance levels, such as, for example, horizontal or slanted trend lines. Now, what we want to pay attention to when we are drawing our support and resistance levels is that we want the level to get the maximum amount of price touches without the price actually breaking or moving beyond the level. The first thing I think what we'll look at is horizontal lines. Basically, all of our, and basically, let me show you how to enter them on your chart. All of your indicators are going to be in the bottom left corner of the platform. You can click on this button right here. And if you scroll down on the bottom, we can see horizontal and as well as trend lines. So if we click on horizontal, you will see a dashed line appear, and basically we can enter our support and resistance level by using this. So so I would enter it like this, and once again, as I just mentioned, we want our level to get the maximum amount of price touches without breaking it. Now, horizontal lines, I would probably say, unless it's at the maximums of the asset price movement or the minimum of the price movement, you are going to see some, I guess, like breakouts or where the price has moved beyond it. But what we have to pay attention to here, you can see the price touched it here, the price touched it here. Once again, so the level is above the price. So this is what? This is our level of resistance. And oops, let me just go ahead and move that back. And I mentioned before that with technical analysis, history tends to repeat itself, works very well. And this is what I would like to show you. The way that we can confirm if this is a very good level is that we can go back and look in history. So as you can see, this was right here it's acting as support, but right here it was as resistance, and here it was acting as support. And as you can see, this is a good level because the price has respected this level before in history. So basically, this is how we would enter our area, our level of resistance. Now so this is our horizontal support and resistance. And also, for example, if I switch down, right now I switch down to our 4-hour time frame. And let me go ahead and zoom this out a little bit. The other way that we can use the support and resistance levels is that we can connect, do it in a slanted way, so a trend line. Once again, we will go into our indicators and click on trend line. And what we can do is basically whenever we have a downtrend, what we do is whenever we're drawing our level, our trend line, we are on a downtrend, we are connecting the tops, the maximums of the price movement. Okay, let me go ahead and adjust it a little bit like this. And basically you can see the price touched the trend line here, it touched the trend line here, it touched the trend line here, and then it broke above the level of resistance. So this is how we would draw our trend line on a downtrend. And also we can do the same thing on an uptrend. Now on an uptrend, let me go ahead and just move this down a little bit like this. Once again, we can choose another trend line, and what we can do on a downtrend, basically it's the opposite. So on a downtrend, we connect the maximum, the tops, the peaks of the price movement, and on an uptrend, we connect the bottoms, the minimums, the lows of the price movement. So once again, so something about like this. Can adjust the levels a little bit. And once again, we see a price touch, price touch, price touch, price touch. So once again, this is how we would draw our level of support because it is below the price movement on an uptrend. So once again, and then the next thing that we would like to pay our attention to is that whenever we have this downtrend, for example, we can expect that the price moves down, it retraces close to the trend line, moves down, retraces close to the trend line, and back and so forth. Whenever the price comes to the trend line and breaks above it, like we have in this situation right here, is when we have either a correction or we have a change in trend. Now, so now that we see how to draw our levels of support and resistance for technical analysis, the next thing that I would like to show you, since we're on the topic of support and resistance, is let's go ahead and talk a little bit about Fibonacci levels. Now, it's actually a lot simpler than it seems. Fibonacci correction levels are actually levels of support and resistance. The Fibonacci grid that we place on our chart uncovers hidden support and resistance created by a mathematical sequence. Now, I'm going to show you this in just one second, but 4 common and popular Fibonacci retracement levels that traders pay attention to is 23.6, 38.2, the 50% mark, and also 61.8. One of the most important rules of trading is the following. You see, markets tend to retrace. This means that the price tends to return by a fraction of a third or a half of the length of the previous trend before resuming further movement in the direction of the trend. So this is why a lot of times the 50% Fibonacci correction level is a very important level that the price tests. And this is basically the same thing that I just explained to you. So the price moves down and then it retraces by a third or a half. Then it moves down, retraces by a third or a half, and so forth. So this is how the markets move. Now, so the Fibonacci levels, once again, we can go to our indicators in the bottom left corner of the platform. And if we scroll down here, we can choose Fibonacci levels. Now, whenever we have a downtrend that's starting a correction, so basically we can see that the price broke this trend line up, we can go ahead and draw our levels of we can go ahead and place our Fibonacci levels here. Now, whenever we have a downtrend that's starting to retrace up, we would connect our Fibonacci levels from the beginning of the downtrend, so here, and then we would just drag this down to where the trend ended. Okay, so we would just click right here, and this is basically our grid. And these are the levels that I mentioned earlier. What we pay attention to is 23.6. After that, we look at 38.2. and then we look at the 50% mark. We also pay attention to 61.8% level because the price can reach potentially this level and then continue with the trend with the in the direction of the trend. The thing is that when we're looking at Fibonacci levels, if the price breaks and moves beyond the 61.8% level, this means that the trend has changed. And we can go ahead and delete our Fibonacci levels because they are no longer valid. So we have a change in trend. But this is a pretty good example because we can see that the price reached what is below the price movement? Support. The bulls, the bears, the sellers met support and they started a retracement. First, we can see that the price reached the 23.6 level. So once again, this is basically our horizontal level of resistance. It kind of it was in this vicinity for a little bit of time, and then it broke above this 23.6 level. Whenever it breaks above this 23.6 level, what we can expect is that the price is going to move to the next level. That's the 38 and 2, and that's exactly what it did. It moved to the 38 and 2, broke above it, and once it breaks above the 38 and 2, then there is we can expect that the price can move all the way up to the 50% level, and that's exactly what it did. After that, for the Euro US dollar, on the 4-hour time frame, it actually broke above the 50% mark. We can see how it broke the resistance, used it as support, but it didn't remain here for long, and it started moving down. And once again, it moved first back down to the 38 and 2, then it broke below and moved down to the 23 and 6. And now basically we are working in between these levels. So this is basically how you can enter your levels of support and Fibonacci levels. Now this was connecting the downtrend. Now if we had an uptrend, we would connect the Fibonacci levels the same way, but we would start at the beginning of the uptrend and move it up to where the uptrend has ended. Now, the next thing that I would like to tell you, to show you, is the moving averages. I'm going to go ahead and delete the Fibonacci levels for now, so that the chart is more visual for us. Now, what is the moving average? The moving average is displayed on the chart as a curved line that usually follows the direction of the price movement. Once again, we can go into our indicators right here, and on the top is where you can see the moving averages. So there are 3 variations of the moving averages. There is the SMA, which is the simple moving average. There is EMA, which is exponential moving average, and WMA, which is weighted moving average. What you have to remember is that they all work in a similar manner. And for example, with the simple moving average, it's one of the simpler indicators which is based on calculating the average price of a certain for a certain period of time. The moving average basically it equally considers all closing prices of the candlesticks starting from the first and ending with the last. That's with the simple moving average. Now, the number of closing prices that are used to calculate the value of the moving average is called the moving average period. And each time that a new closing price appears on the graph, the moving average is recalculated. Now, what do I mean? I'm going to show you an example on the EMA. That's personally what I like to use. And what I did was I just clicked 3 times on the EMA, and now I have basically 3 EMAs that are with the same period. We can click on this pencil right here and we can adjust this period. So this is basically how many candlesticks are going to be in the calculation of the moving average. Now, there are different approaches and different moving averages periods that you can use. Basically, the lower the moving average period, the faster the moving average line, the indicator, is going to move on the chart. The bigger the period, for example, like 200 moving average period, is going to be the slower moving average, and it's going to show us like the global. It will point in the direction of the overall global trend. So basically, what I like to do is I like to use the 13 EMA for my fast moving average. And you can also change the color of the moving average and how it's displayed on the chart right here. The next moving average that I like to use for like midterm is 48. And I can go ahead and change it to blue. And then the last one that I personally like to use is 200. Now, there are different variations to the moving averages, where you have to find which one works best for you. A lot of people use, for example, the 9 period moving average, 20 period moving average, 50 period moving average. So you have to find the right one for you. So basically, what we have here now is we have 3 lines. These are 3 moving averages. So this is the longest moving average, and the yellow one is the fastest moving average. Now, the way that we can analyze the situation with these moving averages is that the crossing of 2 moving averages increases the strength of the signal. So basically, whenever the smaller period moving average crosses whenever the faster moving average crosses the slower moving average, for example, from top to bottom, this means that we have a signal to enter a sell trade. And whenever the moving average crosses the faster moving average crosses the slower moving average from bottom to top, we have a signal to open a buy trade. Now, what I'm going to go ahead and do is I'm going to go ahead and delete this 200 moving average, so that once again, so that our chart is more visible for us. And what I would like to show you is that one thing that we can pay attention to with the moving averages is that when actually the price moves either below the moving average, this is a signal to enter a sell trade. Whenever the price moves above the moving average is when we have a signal to enter a buy trade. This can be accompanied with the 2 moving averages. So this cross is a confirmation, or this increases the signal. And another thing that I would like to show you guys is that we have this downtrend right here, and we have this uptrend right here. Now let's go ahead and let me just show you this. First, the price was above the moving average. Then it crossed the moving average down, and then we had this cross. So this was our signal to enter a sell trade right here. And actually, you can see our horizontal line that we entered on the daily chart. This also means that the price moved below this level of support, and this was also a signal to enter a sell trade. And if you what I would like to show you right here is basically, so we had a downtrend that started correcting to the upside, and as you can see the price has moved above the moving average. So this was our first signal that there's kind of like a reversal going on. Then the price broke above our trend line down. So this is our second confirmation. And then we had the cross of the moving averages. So this is in conjunction, it works as we have to accumulate different signals to see how strong our signal is. And as you can see, of course, the price did move up. So basically, this is how we can use different levels of support and resistance. This is how we would draw our trend lines and use moving averages and Fibonacci levels also that help us and show us levels of support and resistance. Now, my friends, now that we've gone over some of the basics of technical analysis, many of you know that there are many other indicators that you can use as well. And of course, Olymp Trade, our analyst, we have a lot of videos, and we'll be making a lot of new videos and host a lot of live streams where we're going to show you and teach you how to use all the different indicators. What I would like to talk to you about now is just a little bit about psychology and money management. The thing is that many of you are joining for the first time, or maybe you are fairly new to trading, and you watch this stream, and you know in the beginning it can be slightly overwhelming. It's like, oh my goodness, there's so many lines. I just got confused, and I just want to remind you that Olymp Trade has a demo account. It's located in the upper right corner of the platform where you have your live account. You can click right here and you can switch to a demo account, so you can see the chart. Everything is identical. And basically, you can use it for practice to practice trading. You can practice drawing support and resistance levels on different assets and using different time frames. You can practice using the Fibonacci levels and also, of course, the moving averages along with the rest of the indicators. So don't forget to practice, practice, practice. Now, whenever you start learning, I want to mention that you want to try to be consistent. And what I mean is, if, for example, if you are learning about support and resistance, then go ahead and pay attention to support and resistance. Don't try to do everything at once and don't try to jump from one thing to another. Once you are familiar and comfortable with support and resistance, learn about the moving averages and analyze the chart to see how the price behaves with the moving averages, see which moving averages work best for your trading approach, and then you can move on and learn something new. So by being consistent will be more productive and a lot less stressful. Now, since we're on the topic of stress, the next thing that I want to mention is that you have to be in control of yourself when you are trading. You see, when you are trading, you have to have a cool and focused mindset, and therefore it's important to take breaks. Now, different situations can have an effect on excuse me, on our mindset. For example, if you encounter several losses in a row, you may become upset and you can start chasing weak signals and entering trades just so that you can make back your losses. Now, you have to understand that this can ultimately lead to more losses. So it's better to take a break. And then when you're ready to come back and you can try to analyze what went wrong in order not to repeat the same mistakes again. Now, another interesting scenario is when, for example, is like the flip side of the coin. If you have multiple wins in a row and you become super euphoric and you feel like you're a rock star and you're a guru of trading, you see, overconfidence can also lead to losses because you may start to analyze each situation less because you're really sure of your success. I mean, didn't you just see your awesome results? So it's got to continue in the same way. No, we always have to remain alert and focused when trading. So definitely control yourself. And if you feel distressed, take a break. And another very important thing that I want to tell you about today is about controlling your finances. Now, many traders simply do not know how much to start trading with. First and foremost, when you start trading, you should deposit the funds that you are not afraid of potentially losing. Now, this means that you don't want to trade, you don't want to deposit your whole life's savings, for example, and you don't want to borrow money to trade either. Now, everybody is, of course, different, so you need to decide for yourself how much to make a deposit. Now, then the next step comes along, and then once you make the deposit, well, how much do I actually trade with? Do I trade with the whole amount? Half of it? Well, you see, you can certainly enter the trade with the whole amount of your deposit, and you may very well succeed and multiply your account balance fast. But this is very risky because each time you are risking losing your entire account balance. Now, my friends, it is recommended for traders to enter trades with 2 to 5% of their account balance or deposit. For example, this means that if you deposit $100 on your account, each trade should be around $2 to $5. So, just a quick little recap, my friends. Be consistent, control your finances, and control yourself. Don't forget to practice on the demo account and take breaks. You can go ahead and, of course, take some, and definitely, for example, after this stream, if you are new, if technical analysis is new for you, trend lines and stuff like that, please go to your demo account and try to draw them on different assets and see how it works out for you. Let me go ahead and check in chat to see how everybody is doing. Let me go ahead and just 2 seconds here. You can see me now. So, my friends, let's just check in chat to see. My Olymp app is not working. If you are referring to like a mobile device or one of the or like a tablet, please contact our support team. And of course, you can let them know what kind of phone you have and what kind of issues you are encountering, and they will be happy to help you. Let's see. Santosh is asking, hi Angie, how to save these settings overnight? If I open a limb trade next morning, all settings disappear. I honestly don't have this issue often. I do understand if there is like an update on the platform, then your indicators can disappear. But I do believe that they should remain on your chart overnight. If you are still having issues with that, please do contact our support team so that they can check for you to see exactly what's going on with that. Let's see here. VR group, you are our best teacher. Oh, thank you so much. I really appreciate that. And once again, I do apologize for in the beginning, I was having a little bit of a technical difficulties, but no worries. We figured it out and we had a great stream. My friends, once again, I appreciate all of you attending today. Next, very, very exciting thing that I want to mention that I forgot a little bit. Just quickly back to our platform. Once I finish this stream, this video is going to be appear on the Olymp Trade global YouTube channel. And what I would like to ask you to do is go ahead and leave comments below this video. Tell me if you enjoyed it. Please let us know if you're new. Did you try the demo account? Did support and resistance work out for you? Do you have any questions? So basically, leave your comments below this video. Do not forget to enter your account ID number. And please join me next Tuesday, same time, same place. That's going to be 11 a.m. GMT. That's 1 p.m. GMT plus 3. And we are going to give out a risk-free trade for a random, we're going to randomly choose one of the comments below this video, and we're going to give out a risk-free trade. Once again, everyone, thank you so much for joining today, and I will see you guys next time.